Feast your eyes on the artificial opulence of Wall Street. If you only look at the flashing green on the ticker tapes, you'd swear we've entered a new golden age. U.S. stock indices are smashing through all-time highs, fueled by an insatiable AI frenzy. The masses out there are hypnotized. They believe that silicon chips and black box algorithms are the keys to an era of infinite prosperity. But look closer. That's just a polished veneer on a ship with a gaping hole in its hull. Step with me into the vacuum zone behind that velvet curtain. Do you even know what actually happened on October 23, 2025? While the world was distracted, obsessed with the launch of ChatGPT 6 and the latest metaverse vaporware, U.S. national debt silently breached the $38 trillion mark, a staggering, grotesque figure, an albatross of $500,000 hanging around the neck of every single American under the age of 18. Here lies the paradox. Why, in an economy heralded as the strongest in history, did the U.S. government face a paralyzing, months-long shutdown at the end of 2025? Why, while the Fed has pinned interest rates at record highs to suffocate inflation, has the price of gold refused to collapse? According to every textbook rule, high interest rates are supposed to be lethal poison for non-yielding assets like gold, but reality has just dealt a death blow to that theory. Gold has marched relentlessly toward the $4,500 threshold, while silver, often dismissed as the poor man's gold, has shattered every law of financial physics to strike $70. The answer to this madness cannot be found in Washington, nor in the hollow, rehearsed speeches of the Fed. It lies in an iron hand silently pulling the firewood from beneath the cauldron in the East. While the retail crowd is being lulled to sleep by phantom GDP growth numbers, the smart money is hearing the bone-chilling cracks in the foundation of the system. China is executing a maneuver they haven't dared to attempt in 2 decades. They aren't just quietly dumping U.S. debt to record lows, below $690 billion. They are fortifying a secret gold fortress. Internal investigative reports and forensic analysis of global flows suggest the truth is far darker. Beijing's actual gold reserves aren't the 2,300 tons they officially claim. Our data indicates it has likely surged past 5,000 tons. They're preparing for a net zero scenario for the U.S. dollar. This is no longer a forecast. This is an investigation into the collapse of an old world order and the violent birth of a monetary system anchored in hard assets. Are you holding paper promises, or do you own the truth? Follow the money. Trace the flow to see the truth. According to the latest data we've unmasked from the U.S. Treasury, China has slashed its holdings of U.S. Treasuries to below $690 billion, the lowest level since the 2008 financial crisis. Remember, they once held over $1.3 trillion. They are dumping, but it's not because they lack liquidity. The actions of the People's Bank of China, PBOC, represent a global forensic analysis campaign. They have purchased gold for 13 consecutive months, but that is just the surface figure. Our deep cover sources indicate that China is constructing a gold fortress with actual reserves potentially exceeding 5,000 tons, double the officially reported figures. Why do they need so much gold? Because they recognize that U.S. debt is a necrotic wound. When debt exceeds the ability to repay, the U.S. has only 2 choices: print money to trigger hyperinflation, burning the currency's value, or default. Both scenarios lead to a single inevitable conclusion: the reign of hard assets. Meanwhile, Japan, the storm petrel of the U.S. alliance, is starting to disintegrate. The collapse of the yen, despite rising rates, is merely the first domino. Tokyo is being forced to choose: save its currency by dumping U.S. treasuries, or go down with the USD ship. When Japan offloads and China delivers the follow-up punch by liquidating their remaining $690 billion, the ice wall of the U.S. credit system will melt in hours.
Now is the time to connect the dots that the mainstream media is too terrified to mention. Have you ever wondered why silver has skyrocketed over 140% in the past year? Why is silver outrunning gold? This is the logical leap you must understand. Silver is not just currency, it is the blood of green technology in defense. China dominates the global supply chain for solar panels and electric vehicles, the two most silver-hungry industries on Earth. By controlling the physical supply of silver while simultaneously dumping U.S. debt, Beijing is executing a masterclass liquidity squeeze. They are draining silver from U.S. COMEX vaults and shipping it to the Shanghai Gold Exchange. When the U.S. realizes they no longer have enough silver to manufacture missiles or solar grids, they will be forced to buy it back at extortionate prices using the very dollars that are losing value. This is a war without a single shot fired. They, the U.S., are trying to maintain their status by printing promises. We, China, and smart central banks are silently migrating to a system settled in gold and silver. The physical silver shortage is unavoidable. When gold and silver ETFs realize that the metal in the vaults cannot meet the demand for physical settlement, we will witness a technical default on paper exchanges. That is the moment gold won't just hit $4,500, it will aim for $5,000 in 2026.
Investors, we are standing at the climax of a financial drama decades in the making. The spring of U.S. national debt has been compressed to its breaking point. At $38 trillion, every Fed rate hike is like a knife wound to the heart of the Treasury. China has spotted this jugular vein. They are waiting for the perfect moment, a black swan, be it a new geopolitical conflict or a banking collapse in Japan, to deliver the final blow to the U.S. dollar. When this spring uncoils, capital will flee from anything labeled as a paper asset. Stocks may still rise in nominal terms, but their purchasing power will be pulverized by runaway inflation. Only those holding God's money, gold and silver, will remain standing amidst the rubble. The final warning: do not sell early. Do not let the short-term turbulence created by whales shake you out of your position. $4,500 gold and $70 silver are just the warm-up act. 2025 is the year of the crash. 2026 will be the year the world reprices everything. Remember, they want you to believe in the numbers on your screen. We believe in what we can hold in our hands. If you want to continue following the deepest, rawest investigations into the flow of money, hit subscribe to receive the earliest alerts from us. December 22, 2025. While the world was distracted by holiday lights, a silent detonation rocked the global markets. Spot silver shredded every technical resistance like tissue paper, hitting a staggering all-time high of $69.53 per ounce. Why now? Why has the poor man's gold surged 130% in a single year, leaving gold's 60% gain in the dust? This isn't just a rally, it's the short squeeze of millennial proportions. While the masses chased volatile shitcoins, the smart money was quietly siphoning physical inventory out of COMEX and LBMA vaults, creating a lethal liquidity vacuum. The paper silver market is about to face a brutal reality. There is no physical metal left to back their leveraged bets. If you think $70 is the ceiling, you're misreading the tape. This is the death knell for the big shorts and a calculated trap for the arrogant. The spring is coiled. The trigger has been pulled. Welcome to the silver endgame. Follow the trail of breadcrumbs into the dark heart of the global financial plumbing. My investigation reveals a three-pronged pincer movement designed by the smart money to crush the shorts and corner a market that is fundamentally broken. We are not just looking at a price rally, we are looking at the controlled demolition of the paper-silver illusion. 1. The debasement of the fiat shield. First, we must look at the Federal Reserve's systematic betrayal of the U.S. dollar. Jerome Powell has effectively waved the white flag in the war against inflation. by slashing the federal funds rate to the 3.5 to 3.75% corridor and stealthily reigniting the quantitative easing furnace. The Fed has signaled that the dollar is no longer a store of value, it is a depreciating liability. With the DXY dollar index bleeding out to a low of 98.6, the global elite are rotating their wealth out of digital promises and into the only conductor that matters. When fiat dies, Bach, silver, is the resurrection. 2. The industrial death trap, AI and the net zero facade. While the media distracts you with political theater, a structural supply-demand vortex is swallowing every available ounce of silver on the planet. This isn't just about jewelry, it's about the blood of the Fourth Industrial Revolution. 59% of global silver supply is now locked in industrial applications. Consider this. Each solar panel is a silver-hungry beast, consuming approximately 20 grams per unit. As the world blindly rushes toward the net zero mandate, they have inadvertently created a commodity trap. Couple this with the explosive growth of AI data centers and 5G infrastructure, both of which rely on silver's unparalleled conductivity, and you have a recipe for a structural deficit. We are currently entering the 5th consecutive year of a supply shortfall, with a cumulative deficit nearing 800 million ounces. The mines in Mexico and Peru are screaming for mercy, yet the world's appetite for AI and green energy is insatiable. 3. The ghost vaults of London and Climax. The most damning evidence, however, lies in the vaults. My forensic analysis of the London Bullion Association reveals a chilling reality. Silver inventories have evaporated by 40% since 2022. We are seeing reports of institutional titans desperately chartering private cargo jets to airlift physical bullion across the Atlantic just to meet delivery obligations and avoid a technical default. In Shanghai, stocks have hit a 10-year nadir, and the COMEX registered inventory has plummeted to a mere 138 million ounces. The global buffer for industrial consumption has shrunk to a terrifying 30 to 45 days. The big banks have spent decades suppressing the price of silver through massive naked short positions on the COMEX, but you cannot print physical atoms. The iceberg orders are now surfacing. The whales are no longer buying paper, they are taking delivery. And when the vaults finally run dry, the big shorts won't just lose money, they will be incinerated. You are witnessing the greatest wealth transfer in history, hidden in plain sight. Connect the dots. The naval skirmish in Venezuela isn't just news, it's an opening gambit in the Great Resource War. By neutralizing 30 vessels, the U.S. is performing a surgical amputation of resource liquidity. Along with the Israel-Iran shadow war, these are systemic shocks designed to shatter global supply chains. In high-stakes finance, instability is the ultimate alpha. When the map burns, silver becomes the ultimate safe haven buffer. But here is the secret. Unlike gold's ocean of liquidity, the silver market is a tiny pond, a mere rounding error compared to the $100 trillion bond market. Imagine a fire hose of scared capital fleeing bonds and trying to squeeze into a teacup. That is silver, a coiled spring of decade-long suppression meeting a geopolitical spark. Now, consider the net zero paradox. By mandating green energy, governments unwittingly signed an irrevocable contract to buy silver at any price. While central banks claim to fight inflation, their industrial policies for solar, EV, and AI drive silver demand into a structural supercycle. They have trapped themselves as involuntary buyers of last resort. They are desperate. They need silver for their green utopia in AI state, but atoms are scarce. Their failing strategy? Print more fiat to subsidize demand, devalue the currency, and inadvertently propel silver prices higher. This is a feedback loop of systemic failure. We don't trade the news, we trade the inevitability of the collapse. The establishment bets on their narrative. We bet on the laws of physics in the scarcity of atoms. The spring is no longer just coiled, it is fracturing the casing. Are you positioned for the release? Don't let $70 scare you. To an investigator, price is just a distraction. Value is what matters. In 1980, silver hit $50. Adjusted for 2025 inflation, that peak is actually $200 an ounce. We aren't in a bubble. We are just beginning to correct a decade of suppression. Unlike the Hunt Brothers game in 1980 or the QE2 spike in 2011, 2025 is the perfect storm. It is the convergence of a real physical deficit, the AI industrial revolution, and the terminal debasement of the dollar. You can't print physical atoms to fix this. The final warning, the margin trap. The establishment is fighting back. Exchanges in Shanghai and New York, Climax, are already raising margin requirements. This is a margin trap, a calculated move to force retail traders using high leverage to panic sell. They want your silver at a discount. Do not give it to them. The execution plan. Weaponize patience. The market is overbought. Don't chase the peak. Wait for the margin shakeout to pull prices back to the 60 to 65 zone. That is where the smart money has set their iceberg orders. Exercise leverage. Silver is high velocity. A 20% intraday swing is normal. Forget 10x leverage. Hold the asset, not the debt. The big picture vision. Ignore the $75 lowball targets from big banks. They are pacifiers. When a structural deficit meets a currency collapse, there is no ceiling. The veil is torn. Silver is the digital crude of the AI era. The whales are in position, and the spring is compressed to its limit. Will you be crushed with the crowd, or will you follow the smart money? The hunt is on. The war is just begun.